Format: News Flash. Category: News Flash. Serial: Hatches War. On Thursday, Japan's stock market had its best session in months. On Friday, it gave most of it back. The cause of the reversal was a single newspaper article published in New York about a company headquartered in San Francisco whose shares are not even listed anywhere in the world yet.
That is the OpenAI story, and it tells us something important about the fragility hiding inside Japan's extraordinary Nessen-ni-look rally.
On Thursday, June Arsa-woo, Japan's Nikkei ER-chantra-woo surged 7% in a single session, one of the sharpest daily gains of the year, riding semiconductor momentum and EI optimism to close at Nanaman Yisen Lukumichir. It was the kind of day that makes headlines. Portfolios felt larger, the EI superpower Japan narrative looked invincible.
Then, early Friday morning, the New York Times dropped a report citing 3 people involved in OpenAI's deliberations. The company, they said, is leaning toward delaying its initial public offering until Tui Sing AO Sam Altman has reportedly refused to compromise on a target valuation of $1 trillion, and bankers advising OpenAI have warned that retail enthusiasm is limited in the current market environment, particularly after the rocky debut of Elon Musk's SpaceX stock rattled tech investors.
The effect on Tokyo was immediate and severe. SoftBank Group fell 4% on June Arsulux, its largest single-day drop since August. Sandier Sintian, the Nikkei E-Traf O closed down Sintian EU% at Liquenchu Sandai, erasing almost all of Thursday's gains in 24 hours. Hundreds of billions of yen in market value evaporated before lunch.
One newspaper article, one unnamed source at a company with no public shares, $50 billion gone. To understand why a potential delay to an American tech IPO could shake Japan's entire market, you need to understand how much Masayoshi Son has bet on this single outcome.
SoftBank Group, Son's holding company, has committed approximately $65 billion to OpenAI. For context, that is more than the annual GDP of Bulgaria. SoftBank holds roughly 13% of OpenAI, the second largest external stake after Microsoft. According to SoftBank's own filings, the fair value of that investment reached $79.6 billion at year-end, against a cumulative cost of $34.6 billion. On paper, it is an extraordinary trade.
But here is the problem. Paper gains from a privately held company are exactly that. Paper. They appear on SoftBank's balance sheet. They boost Son's net asset value calculations. They drive SoftBank's stock price. But they cannot be easily monetized until OpenAI actually goes public.
An IPO delay is not just a scheduling issue, it is a liquidity question. It means SoftBank's balance sheet shows a massive unrealized gain that could theoretically be repriced, or simply sit locked away in a private company for another year or more while OpenAI burns through cash.
And burn it does. Despite revenues that Bloomberg estimates have grown past $10 billion annually, OpenAI's capital expenditures for AI infrastructure are enormous. The company's financial deficit continues to widen as it races to stay ahead in the AI model wars.
Son has described his bet not as a financial investment, but as a civilizational mission. He told investors last year that calling this an AI bubble is blasphemy. The market has largely agreed with his vision until now.
Because here is what made Friday's drop so significant. On June, just 25 days before this crash, SoftBank's market capitalization briefly surpassed Toyota Motors, the first time in 22 years that Toyota had relinquished its title as Japan's most valuable company. It was treated as a symbolic turning point. Japan was no longer just a manufacturing nation. It was an AI investment nation. The crown had passed from the world's most sophisticated automaker to a holding company whose core asset is a stake in a San Francisco chatbot company.
That symbolism now looks more complicated. Let us be precise about what Friday's crash was and was not. It was not a verdict on Japan's economy. Japan's actual industrial base, the semiconductor equipment makers, the materials specialists, the precision manufacturers, remains fundamentally sound. Tokyo Electron, which controls roughly 90% of the global market for coder-developer systems, did not suddenly become less dominant because OpenAI has cold feet about its stock offering. Advantest's position in chip testing did not change. Shin Etsu Chemical's silicon wafer business did not wobble.
What Friday revealed is the concentration risk embedded in how Japan's Nusen no Schlick rally was priced. The Nikkei is up roughly 33% year-to-date. A significant portion of those gains has flowed through semiconductor names and SoftBank. SoftBank alone carries enormous index weight, and its correlation with OpenAI sentiment means a single media report can move the entire Japanese market in ways that have nothing to do with Japanese fundamentals.
This creates a strange situation. Japan has spent decades building genuine industrial champions, companies with deep engineering moats, patient capital structures, and global market shares that took 30 years to accumulate. Yet the biggest single-day market move in months was driven not by any of those companies but by a leaked memo about an American startup's IPO calendar.
There is another dimension worth noting. Japanese household financial assets reached 2,386 trillion yen at the end of March, according to Bank of Japan data released on June. Nikkei stocks surged 28.6% to a record high of 398 trillion yen. Investment trusts jumped 25.7%. Most significantly, cash and bank deposits fell below 50% of total household assets for the first time in 18 years, a direct result of Japan's new NISA investment program pushing ordinary citizens into equity markets.
That is genuinely positive structural change. Japan has been trying to break its culture of excess savings and mobilize household wealth for decades. NISA appears to be working.
But it also means ordinary Japanese savers are now more exposed to exactly this kind of concentrated volatility. When SoftBank falls 12% because of a New York Times article, the retirement accounts of millions of Japanese households feel that.
The Bank of Japan raised its policy rate to 1% on June 6, the highest in decades. A stronger yen and higher rates compress the financial engineering that fueled some of this rally. And now the central catalyst for SoftBank's valuation, the OpenAI IPO, has been pushed into an uncertain future.
Here is the question Friday's crash forces us to ask. Japan has two stories running simultaneously in Nissen ni Shryukden. The first story is about patient industrial capital, companies that make things no one else can make, that hold market shares no competitor can crack, that compound quietly across decades. That story is real and underappreciated. The second story is about Masayoshi Son's vision of Japan as an AI investment empire, a country that wins not by making the chips, but by owning the companies that shape the AI. That story is also real, and Son has been right about enough large trends to deserve serious consideration.
The problem is that markets have been pricing both stories simultaneously as if they were the same story. They are not. The first story is slow, durable, and largely immune to a newspaper report. The second story is fast, leveraged, and extraordinarily sensitive to events in San Francisco.
Friday was the market clarifying which story it was actually buying on Thursday. SoftBank's investment in OpenAI may ultimately prove transformative. Sein Nissen Nischarun IPO at a $1 trillion valuation would represent one of the largest wealth events in Japanese corporate history. But between here and there, Japan's market has a dependency it cannot control on a private company, led by a founder who will not compromise on price, in a sector that is burning cash faster than any previous technology wave in history.
The Nikkei could be at 80,000 by the time OpenAI finally goes public. Or it could spend the next year digesting this concentration risk while Japan's actual industrial economy quietly generates the earnings that nobody bothers to write newspaper articles about.
The Japan factor has always been that the most interesting things happening in Japanese business are rarely the things making the most noise. Friday was a reminder that the loudest things are not always the most durable. Word count, Senyon Haksjurnai words, estimated duration 91 minutes, format, news flash.